And it's 10 a.m. right here in Lagos, Nigeria. It's the trading day right after the release of the rebased inflation data. Also today, CBN Monetary Policy Committee begin their two-day rate-setting meeting. We'll get a decision tomorrow. So much for investors to ponder about this time. But let's get to the top stories that set your agenda now. Start with oil prices. They edge higher today amid the oil supply disruptions in the U.S. and Russia, and as markets are waiting clarity on the Ukraine peace talks. And we're seeing Brent, a big move up there, 0.3%, $76.04 a barrel. The U.S. grade, WTI, $72.08 a barrel, also up 0.3%. And definitely this coming from a mixed performance yesterday for both benchmarks. But it's looking quite positive going on this week. To other matters now, the Nigerian National Petroleum Company Limited has refuted reports in the media that it imported over 200 million liters of premium motor spirit in February 2025, calling the report false and misleading. NNPCL clarifies that it has not imported any PMS in 2025 and does not regulate or issue import licenses to private marketers. The company stresses that linking all fuel imports to NNPCL is inaccurate and irresponsible. Emphasizing its commitment to energy security, NNPCL warns against spreading misinformation that distorts market realities, urges the media to fact-check reports before publication, and vow to take legal action against the spread of falsehoods. Let's go to the FX market. Now, yesterday, the Naira traded within the range of about 1,500 to 1,525 Naira to the US dollar, appreciated by about 0.15% to close at 1,510 Naira 33 kobo to the US dollar there. So we see the NAFEX just flat, 0.01, 1,513 Naira. Furthermore, the gross external reserves, that declined by 0.40% to $38.88 billion as it's 17th of February 2025. And reactions trickling in following the rebased inflation data by the National Bureau of Statistics. One is from the Center for the Promotion of Private Enterprise, CPPE, which attributes the sharp drop to the updated computation base year and a strong base effect from last year's high inflation. It also notes that lower spending in January following December's festive surge, that also contributed to the slowdown. However, CPP cautions against that lower inflation does not mean prices have fallen, only that they are rising at a slower rate. Key concerns like high energy costs, currency instability, and transportation expenses continue to strain businesses and their households at this time, despite emerging signs of price reductions in fuel, food, pharmaceuticals. CPP says sustained efforts are needed to achieve real relief for Nigerians. It called for policies that will further ease inflation and improve economic conditions. And more than 300 businesses are represented here as the Federal Inland Revenue Service begins engagements on the first phase of electronic invoicing. The service believes that this will be at the core of a new tax regime which will build confidence among taxpayers and enforce transparency in the country. The Chief of Staff to the Executive Chairman of the FIRS, Mr. Tayo Kole-Osho, he represented the chairman and explains that the e-invoicing solution is an accounting system that can be installed on PCs, phones, tablets, and cloud-based platforms to generate electronic invoices with tax elements that can be tracked and documented for tax administration. The tax elements that are included in the e-invoicing for both B2B and B2C transactions include invoice number, goods or services description, applicable taxes, tax rates, and amount payable, among others. Take a listen.
We started a new journey in our engagement with our taxpayers as FRS as we start this new innovation of deploying an electronic invoice, also called a merchant buyer service solution. And the idea is to meet with the large taxpayers and understand what their own requirements are as we continue our journey into what we call a tax administration solution 3.0, where there will be more integration with the electronic reporting systems, the POS systems, and all the other cloud solutions, so that our businesses can be more efficient and they can have a better integration and exchange of data with the tax administration, and also provide more data for their business and making intelligent decisions for their businesses and even for the country to make both fiscal and monetary policy decisions. So those are some of the things that we are hoping to get from. So this is a pilot. This is a pilot implementation that we're about to start. We have a couple of the large tax customers, companies like the MTN, Huawei system, and a lot of the oil and gas companies that are already integrating with us. But this engagement and this integration will last, we think, the next 6 months. So it's a journey that is, we are being deliberate in making sure that we have all the stakeholders carried along, consulted, so that all their feedback can be integrated into this system.
All right, now let's drill down on the rebased inflation data for January 2025 that takes headline inflation to 24.48%, food inflation 26.08%, core inflation 22.59%, urban inflation, if you can put that up for me, 26.09%. That's the one from the NBS there. We see the new data, that's for January. Takes rural inflation, that's at 22.15%. And there are also a couple of changes that have been made to this new methodology, and that's according to the Statistician General. So you can put the improvements now to the methodology. COICOP, that's been moved from 1999 version to the 2018 version. That's COICOP. That means classification of individual consumption according to purpose. That's most of the improvements made to the methodology. To help us unpack this, let's bring in Basil Abi as a co-founder, Veriv Africa, a research and advisory company. Great to have you on the show. Good morning.
Good morning, Ladi. Pleasure to be on the show yet again.
Great to have you, Basil. So some say we shouldn't use the word dropped, that inflation has dropped. They say we shouldn't use that when reporting Nigeria's latest inflation. Rather, some say Nigeria's inflation has transformed at this point. But, Basil, what would you call it, at this time?
Yeah, Ladi, it's quite funny, but I'll tell you, it's the weighting class that is the most important factor for the reduction. And that's because, like explained by the National Bureau of Statistics, the new methodology takes into account a number of things. For instance, they increased the number of price products that they're observing for their changes in price from over 740 in the last 2009 CPI methodology to the 2025 CPI methodology, which has over 934 price products that they're observing for. They are also reducing the weight classes for a number of, the weight sizes for a number of weight classes. Now, this is based on one core thing. In 2023, the National Bureau of Statistics carried out the Nigeria Living Standards Survey. And in that Living Standards Survey, they found out that on average, Nigerians are now spending, in terms of the proportionality, they're spending lower for food. And so that means that the weight class for food reduced from 51% to 40%. So now if you bring that into context, as we know, of course, the biggest driver of inflation in Nigeria is food. Food prices are super high, and we have noted that since 2020. And when you bring that into context as well, there was also another significant reduction. Price expenditure for housing, for water, for gas, for electricity, the weight class reduced due to that Living Standards Survey from 16% to 8%. So that's a 100% reduction. Obviously, there were increases due to computations. There were certain weight class increases, like healthcare, for instance, it doubled from 3% to 6%. Other weight classes like transportation increased from 6.5% to over 10.7%. Those increases were significant, no doubt, but nothing can be as significant as the food weight class reducing from 51% to 40%. So that recalculation, and then, of course, the use of a very volatile year as the price reference period. 2024, of course, as we know, is the year that Nigeria recorded its record high inflation rate and its record high food inflation rate. First time since the Sani Abacha days, actually, we got those very high numbers. So when you put all of this into cognizance, you can understand the cries from certain analysts who say that we shouldn't call it an inflation drop, but rather an inflation transformation. But yeah, it's just the reclassification of the methodology that the NBS uses to monitor price level increases, and that obviously has a direct effect on policy moving forward, especially knowing that the Central Bank of Nigeria today, their monetary, the 199th Monetary Policy Committee meeting starts today, and I'm sure they're looking at those numbers and how do we react? So, yeah, my response to this is just to explain the methodology changes and the weight classes differences that has led to this reduction in inflation numbers.
Right. And Basil, I guess it's safe to say at this point it's in with the new, out with the old. So this is our new reality, when it comes to inflation. This is the starting point. 24,
yes,
at 24%. But let's look at some of the improvements to the methodology, as stated by the Statistician General, Prince Adeyemi Adeniro, starting with the COICOP. That's the classification of individual consumption according to the purpose. COICOP, if you can put that up for me. COICOP was moved from 1999 version to the 2018 version. Exclusion of own production, imputed rents, and gifted items. That's for the improvements to the methodology now. Reassign meal expenses to the correct divisional class. That's if you're looking at most of the improvements. So there are improvements at this point, but what do you make, of these improvements? Are they what is taking the inflation number down? Looking at that COICOP move from 1999 version to 2018 version, was it some updates when it comes to the methodology? Speak to these improvements.
Yeah, the improvements basically dilute the factors behind the rise. For instance, since we've had the year-on-year and month-on-month rise in inflation. Those improvements just dilute the factors. Like I mentioned earlier, of course, the dilution is very key in the food sub index, because in the food sub index, that reduction is from 51.8% to over 40%. And now you have the number of exclusions as well as the number of additions. Don't forget, the core dilution is because they're increasing the price items that they're calculating from 740 to 934. So when you add more to your basket, what happens? The weight classes for certain things, the significance for certain things reduces. So it's just a reduction in significance for a number of the both the weight classes and the price items. Regardless, it's important to continuously increase the number of components that you're observing for price changes. It's very important.
Sorry, Basil, we'll get back to the conversation now, but for our viewers on DSTV, we're going to join live coverage now of the coronation and presentation of staff of office to the people of Madagali in Adamawa State. But you can continue watching this Business Morning on other platforms as we're unpacking what played out with our inflation numbers for January. Sorry for interrupting you there, Basil, but you can finish your thoughts now.
Yeah, no worries at all. Like I mentioned, just the change in methodology, the increase of price items being observed from over 740 price items to over 940 price items ensures that there's a dilution of some significant or hitherto significant weight classes or price items. And because of that change in significance, you see that reduction. Another important factor, of course, for the reduction, like I mentioned earlier, is the price reference period. The price reference period starts from a very volatile year, and that means the alpha, or the start of calculations, can lead to a distortion or a reduction in the numbers. And that's exactly what happened. I said this last month when I was on the show, just to explain the new NBS methodology. And I said, of course, there's a likelihood that we'll see a reduction from the 30 percentile range to the 20 percentile range. And exactly that happened.
All right, so I know I was speaking with you earlier. We know about positive interest rates. Right now, our MPR, that's at 27.5%. This inflation number, 24.48%. And we've had a negative interest rate, for a while now. Downside for that includes, is quite discouraging, for people that want to save money. When you have negative interest rates, it also brings distortion to financial markets. So we have a positive real interest rate for the first time in a long time. Are you celebrating that?
Well, trust me, I think that the folks in the industry sector, if you read the Purchasing Managers Index that CBN released last week, you look at the numbers there. The PMI has increased for the industry sector. There has been an expansion. A contraction, of course, happened in the services sector. But the main guys, the real sector guys who really want financing, especially short-term Naira-based liquidity, would be, of course, having a sigh of relief. And the reason for that is that there's a very high chance that the MPC will look at the logic and decide to deploy a wait-and-see approach and stick to the positive real interest rate still at 27.5%. The numbers is, if you have the MPR at a certain number, most banks will add an additional 3% to their cost of debt or the cost of the loans that they're selling to industry-level consumers. And the industry-level consumers are the manufacturers, the processors, and folks in the heavy industry and construction. So for them, I think they'll be heaving a huge sigh of relief because of that. That should be the thinking. My analysis and that of my team is that the MPC will hold. And the reason for the hold, of course, is that they wanted to see what the inflation report would be. And since the inflation report is at 24.48%, and you know that the MPR is currently at 27.5%, they would want to deploy a wait-and-see approach for the next 3 months and see whether, of course, Nigeria's inflationary trend is actually an inflection point or at a trough. And inflection point, what I mean by that is basically that the rate of acceleration in inflation is reducing significantly. And then, of course, by a trough, it just means that it rebounces back and spikes up in the next 3 months. So a wait-and-see approach is more commonsensical so that, we're not causing the financial services sector into a new doldrum of chaos in that sense. So a bit of stability now is what the MPC should be looking at.
And talking about, causing problems at this time, MPR, that's at 27.5%. Inflation January, 24.48%. What's wrong with a 25 basis points cut?
Well, that's us Nigerians being too excited. That's also the policymakers also being really excited. I don't think that's the right way to go. And if we're to use global best practices, we're to observe the Feds as well as the Bank of England. In this case, sometimes whenever inflation drops, it's not necessarily a cue to say you want to reduce the MPR or the interest rates, make those cuts. So I think a wait-and-see approach is just more commonsensical because you're observing for how price level changes happens with this new rebased CPI methodology, with these new weight classes. We want to be able to see, especially now that we're in the dry season for food, that since there has been a reduction in the food weight from 51% to 40%, we want to be able to observe throughout the dry season and see what food prices really spike high and what food prices are, lowering, maybe because of the seasonality of them. For instance, I went to the field 2 weeks ago together with my team. I was a field supervisor for one of our food data production and market price project. And one of the things I noted was the seasonality of certain food crops like tomatoes. Tomato is reducing month on month on a weekly basis, because the season, this is the peak season, and by the time the rains start to come from April and May, we will start to see certain food crops like tomato itself and peppers spike up in price, while other food crops would increase. So this sort of contextual observation is very important, since whether we like it or not, food prices are still a huge part of the huge factor that is driving inflation. Let's also not forget, if you read the CPI data, the inflation data that MBS put out yesterday in depth, you also see that imported food items still give a huge chunk in terms of the drivers for inflation at 11.7%. So just imported food itself is at 11.7%. And the reason for that, again, is the seasonality of certain food. So because of the seasonality of certain food, we'll start to see a spike in food importation. And unfortunately, if you're observing FPI inflow, it is receding. And if FPI inflow is receding, and we're still not pumping 1.8 million barrels, and then Brent crude is still at $76, not going to $80, it means that the current stability we are seeing for Naira might change. And so if it starts to change around May, there is going to be the exchange rate pass-through inflation, because Naira moves from the 1,500 range to a dollar to a 1,600 range to a dollar. And that's around the period when food imports start to spike. That's also around the period when certain food prices spike up. So imagine that drives further inflation. CBN's MPC will be pinching themselves and saying, why did we get so excited to reduce MPR? In that context. So this explanation for me, I think, should be what the MPC will be looking at. Say, okay, you know what? Let's give it 3 more months. Let's give it maybe the MPC. Let's give it till the 201st MPC meeting before we decide to hike or cut interest rate or the MPR.
Definitely, we're also going to be looking out for what plays out for February under this new rebased inflation data. Definitely a lot to watch out for. I'm trying to imagine what's going to happen, come the end of February. If there's going to be a change to the high side or to a lower side, we'll definitely find out. So much to look out for. Thank you so much. We've already seen the impact for the stock market. Yesterday was a drop for the all-share index. We'll see if that continues the trade today. Thank you so much, Basil Abia, co-founder of Veriv Africa. Thank you for sharing your thoughts with us today.
Thank you, Ladi. Always a pleasure.
All right, we'll take a break now. When we come back, we'll be looking at Nigeria's downstream sector. That's in a moment. Just stay with us. Now let's turn our attention to the downstream petroleum sector in Nigeria, focusing on the regulatory environment, consumer protection, and the impact of deregulation. Well, joining us to discuss as well, Mr. Jide Pratt, the COO, Iona, and a country manager at Trade Grid. Joining me to explore the complexities and the implications for the Nigerian economy and consumers. Great to have you.
Thanks, Ladi.
It's, I guess it's Happy New Year at this point.
It is.
Last time I spoke to you on this show.
It was last year.
Last year.
Absolutely.
Welcome.
Good to see you, Ladi.
And a lot has happened,
Yep.
Before then. But before we get into it, I remember many years ago, everyone would say, and experts and, economists will say, if Nigeria starts to refine its own oil, everything would be great. Fast forward to now, we're seeing a lot, happening at this time. We're refining. We have a big private company with a refinery. We have most of our public refineries coming back online at this point, but there's also talk, about distortions, here and there. And PMS, we're paying prices we've not known before, we've never seen. So, for you, where are we, at this point? Why isn't it El Dorado with refining?
Thanks, Ladi. It's always a pleasure talking to you. So let's start with the fact that there was a lot of misconception that once we start refining in Nigeria, it will be the silver bullet. That was an incorrect notion, and clearly we see that now. So let's backtrack. 4 or 5 years down the line, we had no refining capacity. It was zero. So I think we should start with the first to win. The Dangote refinery came on stream. And that has closed the gaps that we had for local refining. A lot of conversations around Warrior and Port Harcourt coming on. While they may be on, they might need to ramp. While they are old refineries, efficiencies might not be there, but it's neither here nor there. So we're refining. The second thing is that once you start to refine, we're looking at a conversation that now dovetails around energy security. So you'd say affordability, accessibility, availability, and adaptability. Those are the quadruple A's of energy security. In that mix, it will pull in things like regulation. And why does it need to do that? Because you see, one thing that must happen in an economy that deregulates is that competition has to be allowed to thrive. The more people in that space that compete means that they begin to drive efficiencies. Ultimately, we're talking about the customer here now. Now, if they drive efficiencies, then they're able to give some sort of relief to the customer. So I said that to say this. What it means is that while competition is being encouraged and must be driven, there must be regulations so that it's an all-comers affair, but it's an all-comers affair for people who are capable of playing in that space. The next thing will now be that, where are we now? We've seen prices undulate. We've seen prices go up. We've seen prices go down. So back to regulation. Where and how should those prices move? There is no hard and fast answer yet.
So the regulator does come out and say, no, prices should be at this rate to favor the consumers.
So the regulator cannot say that. So and now we're going into fair pricing.
Right.
In fair pricing, it means two things must happen. The consumer must not be overly burdened with paying a cost that is prohibitive. But at the same time, the people who have put the investment, so you've got depot owners, you've got refineries, they're investing some capital. They must also get a return on the capital. So it means that the regulator's job is to guide the market. And you guide the market by doing things like, okay, what kind of pricing methodologies are you using? Is there a price discovery model? Personally, I believe there should be a price discovery model. Why does that do that? It tells you, if you put A, B, C, D, and E together, this is the ballpark that you should get to. The regulator might struggle with that, saying that, should I be the one to guide the market on prices? Look at the PPP era. We were in a non-deregulated economy then, and then there were prices. There was a guiding template for everybody to know. If you went to places like Ghana has been deregulated for a while, but on the NPA website, that's the National Petroleum Authority, you can see the prices that guides what you call the bulk distribution companies. So that template is a guide. If you went to Kenya, if you went to Chile, I mean, all these places have that price discovery.
And we also have a guide here.
What
a
guide?
Pricing guide.
Well, when you say we have a guide, I'm struggling because if I went to the regulator's site, I don't see that guide. That ideally, that should be in the space of the regulator. And what does that do, Ladi? It opens up transparency so that there's a method to the prices we're driving to the pumps. Because if you asked an average guy, what do you want most? The average guy could tell you, I just want prices that are cheap. But while prices could be cheap, am I able to return my investment? I've built a depot. I've done an integration in terms of depot, I own trucks, I run retail stations. So
right, and looking at the business angle of it,
correct.
We know you're in business to make profit.
Correct.
But you know, we've had challenges in Nigeria. That big word, profiteering. Everyone wants to make more profit than they should.
Correct.
So that is a risk we have in this industry.
It is a risk, which is why we were talking about the regulators. So on that side, there are two regulators. For the industry, you have NNPCL, which is why I'm going back to a price discovery. But also the FCCPC has a job to do in terms of, okay, what is fair in terms of your return on investment? Are you overtly charging? Do you want cost-reflective tariffs, back to the NNPCL, or do you want value-based tariffs? Is there a mix of dynamic pricing where you can say that, okay, Where you're at home, for instance, if you went to power, if people are in the office, then it means that if they're using more power, then maybe we should charge a higher kilowatt per hour on that end. When you're back at home, do we reduce it? We must get to a stage, Ladi, where there's transparency, but there's also a guide. Does the regulator want to put a price bar and say that you can't go beyond this, or a price floor? But you see, in doing all these things, two people must be taken care of. The person who runs the investment, and also the person who is buying at the pump. So that guiding principle has to be done by a price template, in my opinion.
And, from what we've seen so far, it seems the bulk of the pressure is put on the consumer, at this point. So what should the regulator be doing at this time to, change that narrative? Because at the end of the day, the average consumer is hit from all sides.
Yeah.
Everything is going up, at this point, even though we got the January inflation that shows inflation is rising at a slower pace compared to with the new methodology, at this point. But what should the regulator be doing?
It still goes back to the ballpark of transparency. The regulator has to guide this industry. Why does the regulator do that? If the regulator doesn't do that, then it means players in that space can wake up in the morning and I want 100% profit. But if there's no basis to 100%, who stops them from doing that? Regulator. We're going back to FCCPC. So they must be engaging conversations. NMDPR has to be having conversations that, look, if you're bringing in X amount in terms of import, what is the basis of your pricing? Is it CIF? Is it FOB? What are you looking at in terms of shipping? There must be some transparency so that if the regulator has that data, then the regulator can say that, but you're charging an excess amount here based on what you've landed. But if they don't have that data to compute, Ladi, then we'll keep on having these conversations, but it will be up in the air. There must be a guiding template. It must be published. It must be transparent. The regulator has to ask the players, what is the basis of price A or price B? Have an understanding, and that way they can protect both the person who is investing and the end user. That is the way it has to happen.
Right. And I'm talking about, protecting the end user. On social media, we've had that talk about whose fuel is better, when it comes to the major refiners, in the country. And, there's also that talk about, sulfur content, which one's burning slower, burning faster. But in all of this, how do we make sure the consumer is getting quality?
That's a brilliant question, Ladi. And it goes back again to regulation. You see, we can't have this conversation any which way without regulation.
Right.
So look at petrol. The petroleum regulator is the NMDPRA for downstream. So they say this is a specification sheet. And I'll take an example of PMS. You would see, in terms of specific gravity at 15 degrees Celsius, you would see a range of 0.72 to 0.78. That is a guide that the regulator has put in. You would see things like research octane number, minimum 91. It's a guide, because what they're saying is that the quality must not go beyond this standard, whether you import it or whether it's locally refined. So those are guiding principles that the regulator puts out. If you look at products, what makes a product burn faster? These factors also play. If you also looked at that video, there was something that we noticed in the video. The colors were similar. It is important that if you looked at a specification sheet for petrol, you would see clear and bright. So petrol by effluxion is more often than not like water, light. But everybody that refines or in that process adds what you call a dye. That's why on the same spec sheet, you might see things like ox blood in terms of distribution. So under color, they'll put clear and bright. You now see color for distribution, ox blood red. And that is to differentiate. You're not carrying water.
So ox blood is not a bad thing.
It's not a bad thing. So it's a dye issue. They're putting dye into that so that for safety reasons, for differentiation, just to be able, you're not carrying water, and don't get it misguided. Of course, there's a smell, there's a look and feel, but I mean, the more you see, let me backtrack. Years back, I remember when jet fuel, which is aviation fuel, and kerosene are very, very similar in terms of properties and characteristics. So in the industry, there seems to be some issues around people selling one for the other. So the regulator then decided that, you know what, put green dye in jet fuel. So automatically, if you're lifting the green, quote and unquote, colored aviation fuel, you know it's jet fuel. You can't put it in your kerosene stove. Only the regulator can do all this guiding.
I'm talking about, guiding. I remember some time, many years ago, I think I was in secondary school. There was a kind of fuel that was imported into the country, had a terrible scent, a very strong scent, but we've never had that issue, since that time. So I guess it's safe to say we've had quality petrol, so far in the country?
It's safe to say we have had quality petrol. Now, another thing might be at what quality, because you did mention something about sulfur. So ideally, the less sulfur that there is, ideally, the more expensive it is. That's how it should be. And the more sulfur there is, then of course, the cheaper it should be. So it means that if somebody is supposed to get to 20, let me say 20 parts per million, and is at 50, then it means there should be a price differential. Means that it should be cheaper going towards 50 and more expensive going to. These are also things that need to be guided by the regulator. What you talked about then was basically ethanol. So the quantity of ethanol probably was much more than it should have been for that process or those cargoes that came.
Back then?
Yeah, back then.
Was it bad for the cars then?
I'd say yes, because your combustion is based on, and you always hear Nigerian grade gasoline, Nigerian grade gasoline. So clearly the cars that we buy, the consumptions of those cars in terms of combustion is made to a certain specification. So if there's too much ethanol, it could have issues in terms of clogging, but I'm not a mechanical engineer. So, I mean, those are the things that happen.
Right.
Then. But I think we've gone past that to a large extent.
All right, so, it's 2025. What do we need to see more to, bring sanity into this industry and to, so maybe the average Nigerian can at least pay an affordable price
I would
for
say,
PMS?
I would say two things that are critical, and we've talked about the regulator in terms of transparency. But we also need more competition. We need to be able to bring in as many players that can play in this industry, because you see, competition will drive efficiency. If it drives efficiency, then what it means is that my cost to the public reduces, because I'm able to drive efficiencies. But data is still the most important part, Ladi. We need to be able to go to a website of the regulator and say, okay, these are what the prices look like. We need to be able to apply dynamism. So if crude oil drops, at what stage did it drop? If the gasoline index has also dropped based on crude oil drop, then we should see that reduction at the pumps. We shouldn't wait for, so let's get dynamic. And at the same time, if we cut it now and say that crude oil prices have gone up, then maybe there's an increase. But that dynamism should not wait, where you hear people driving to the station and saying, but you've changed prices now. Why did this price go down and then you're still selling at the old price? And then I'll tell you, but if it went up, you would have changed immediately. And then people will tell you it's stock. So things like weighted average cost of capital need to come into the mix. But two things are key, and I'll end by saying these two things being very, very key. Competition has to increase. It must continue. Local refineries, importing, that is the only way we will drive efficiencies. It cannot be this person do this person, no. And then fair pricing. The regulator needs to check that. But what is most important is that there must be transparency. I think these are the things we need to do going into 2025.
Right.
To be able to do.
Still early days, and we do hope all of that, plays out in this industry. So Ladi can drive to the filling station and not always have his heart broken.
Ladi, go to CNG. Go to CNG. Go to CNG.
Yeah, CNG conversation. That's not been coming up this year, but we'll revisit that.
No worries.
Thank you so much, Jide Pratt, COO Iona, and country manager at Trade Grid.
Thank you, Ladi.
Thank you so much for coming on today.
Always a pleasure.
I'll take a quick break now. When we come back, we'll see what's playing out in the global economies. That's in a moment. Just stay with us.
Welcome to Art House. I'm Melinda. Coming up on today's episode of the program. Life is a stage.
A bold canvas. Splash some paint on it. String some rhymes while at it. Then enjoy it on Art House. Receive life in beautiful curves, crafts, colors, and most exciting forms. Join us as we savor intriguing sights and sounds. At these times, Art House, life is art.
There are places you would like to go. There are faces you would like to see.
My palm is bruised. It's a tiny scar, but it's very painful.
Too many exciting things happening all at once.
From time I've always loved playing the villain.
But you can't be everywhere. Guess what? Yes, we can. Your favorite lifestyle content lives here. Let us be your eyes and ears here on Entertainment News on Channels Television.
Welcome back. Well, let's get a check on what's playing out with other major economies that we track, and we have Vinny John Mekwa with the details. It's inflation reporting season.
Yes, it is.
And some numbers are not looking good for some countries.
You know, somebody said this morning on one of our shows that, is this the way we're going to hit the 15% target?
Right.
You know, by this rebasing. And I know LCCI has come out. LCCI, CPPE, let's know that this is a matter of rebasing and changing of the methodology.
Not that your inflation
It's
dropped.
not just inflation has dropped.
Right.
As somebody said, go to the market today, compare prices between December and January. Are you going to see a 10% drop in the prices?
You're not seeing that.
So perhaps, I think you started the show by asking if we should even use the word drop.
No, we shouldn't.
Or maybe change.
It has, it's a metamorphosis at this point.
I don't know. I don't know about all of that, Ladi, but good morning, everyone. This is the global news segment of Business Morning, where we take you outside Africa and outside this continent or Nigeria. We'll start from the UK this morning. Ladi did say it's inflation reporting season, accelerating faster. That's what we see for UK inflation than expected at the start of the year, eating into workers' wages and putting pressure on employers to boost monthly pay packet. I wonder if they will do that. The Consumer Price Index, that's the CPI measure of inflation for the United Kingdom, rose to 3% in January. This is according to the Office for National Statistics, and it's going up from 2.5% in December. That's a huge move right there, 0.5%. Well, it had been expected to be a smaller increase to about 2.8, but we see that it's gone beyond that. The ONS says that's a jump in the cost of meat, bread, cereals, and food bills generally, while a jump in private school fees after the government's withdrawal of a VAT exemption pushed up the cost of education services and added to this. Airline ticket fare in price, but not as much as usual, combined with a rise in fuel cost, pushed up the rate of inflation in the transport sector to its highest level since February 2023. But it doesn't seem to be that bad for New Zealand. We see for that country from their end, it's a cut. The central bank slashed benchmark rates by 50 basis points to 3.75%, marking its fourth straight cut, as easing inflation offers the central bank room to boost sputtering economy. The move was in line with expectations from economists and marks the lowest the policy rate since November 2022. In its monetary policy statement, the Reserve Bank of New Zealand said that inflation remained near the midpoint of its target band of between 1% to 3%, prompting it to lower rates. New Zealand had reported headline inflation rate of 2.2% in the quarter ended December 2024, with price growth falling for 7 of the last 8 quarters. The rate cut also comes at a time when the country's growth has been declining year-on-year basis for 5 straight quarters to September 2024. The New Zealand dollar strengthened following this by 0.4% to trade at 0.568 against the greenback. And from there, we go to the world's second biggest economy, China. They're starting to see a rebound in the mergers and acquisition scene after years of decline as the government stimulus measures start to bear fruit, while pressure from Donald Trump's tariff is also driving industry consolidation. In 2024, China's M&A, that's mergers and acquisition activity, was on course to log a 5th straight year of decline until the final quarter of the year, which saw a sudden acceleration in activity. The value of deals conducted during that period jumped 78.5% to $128 billion from $72 billion in the previous quarter. And this, of course, according to official data. Deal making is also about to pick up, according to them. Industry watchers are following the story and are very optimistic about it. Now, Europe, HSBC now is, they've announced that there will be a share buyback plan worth $2 billion in its annual pre-tax profit. It rose to 6.5%, helped by sale of its banking business in Canada. For the full year, HSBC reported revenue of $65.85 billion. That's down from $66.1 billion in 2023. The bank's profit before tax for the 4th quarter nearly doubled from a year earlier to $2.3 billion. The lender had incurred an impairment charge of $3 billion in the 4th quarter last year, impacting its performance. Revenue for the reported quarter declined to 11% to $2.3 billion. HSBC says it expects to complete the announced share buyback by the end of the 1st quarter of 2025. Now to one of the hottest stories at this time around the world. It's the Trump tariff. That's what it is. Well, sentiments among single-family home builders dropped to the lowest in February due to concern over tariffs, which will raise their costs significantly, and the National Association of Home Builders Housing Markets Index dropped sharply by 5 points from January to a reading of 42. Anything below 50, we know it's negative for most of the indexes that we follow. Builders are already facing elevated mortgage rates, and the average on the 30-year fixed mortgage rate was above 7% for January and February, after earlier being in the 6% range. Home prices are also higher. And still talking about the tariff, President Donald Trump is on it again. This time, he said he would likely impose tariff on automobile, semiconductor, and pharmaceutical imports of around 25%. Yes, with an announcement coming as soon as April. You know, he did form that committee that's supposed to deliver by the 1st of April. So perhaps from the 2nd of April, we would hear more pronouncement. And Trump had previously announced 25% a tariff on steel and aluminum that are set to take effect in March. And Tuesday's comments are his most detailed yet in specifying other sectors to be hit with fresh barriers if implemented. Now we have our correspondent in Washington. Maria Bird had to wake her up about 2 or 3 a.m. at this time in Washington. Hi, Maria. Good morning.
Good morning.
Yeah, so, I mean, the world has been talking about Trump since his inauguration, tariff, trade war, and all of that. But tell us, how is it in the U.S., all of these talks on tariffs? We just read about the home builders, how it's becoming more expensive for them, a drop in their sentiment below 50 and all of that. But in reality, living in the United States, how's the Trump tariff, what impact is it having on you guys?
Well, I think the biggest impact right now is individuals wanting to go out and spend. I think the question is whether or not, if they go out, as you mentioned, the price of building a home could potentially become more expensive starting in March. And there are home builders that are obviously thinking through what impact this might have on the materials they'll need to complete the projects that are currently underway. We oftentimes see new single home building developments saying sold out. And so we still see that at this time. We haven't seen the direct impact of what's been stated. I think it's predicted. I think some of the new developments that were planned for 2025 either could be stalled, potentially people could be looking at other avenues for that. But I think the average American is watching to see how this could have an impact if they had a plan, specifically, as you mentioned, whether it's to buy a home, buy an automobile. I think these new announcements around the auto industry and the imports around the 25% for cars that are made and brought in and imported to the U.S., these foreign-made vehicles, does have a potential impact. We're looking at potentially thousands of dollars increase in some of those vehicle prices, which were not seen previously. And so I think people are kind of watching, they're waiting. People are trying to see how this could have an impact, also seeing how this potentially could have an impact on employment. Obviously, the conversations are around, we're waiting until March and April to give companies a chance to bring some of this manufacturing to the United States, which then means employment opportunities for Americans. So people are trying to see how this will impact and if it will be something that Americans can do to increase their employment rates. As we know, we have been challenged ever since COVID around the economic stability. Inflation rates have had an increase. And also, as I've heard you mention before, people are also concerned about the dollars they're making. Obviously, with inflation increasing and not having an increase in wages, does have an impact on people's livelihood.
Yeah, I think another side of that is the migration policy. President Trump hasn't been quiet or about his determination to get illegal migrants or residents out of the country. And last week, I believe we saw the inflation numbers, and so one of the drivers was the price of eggs. And some people say the farms are emptying out because the individuals who do these menial jobs are these illegal migrants that are being chased out of the country. Are you feeling the impact of that? What are you hearing about the farms and all those menial job workers?
So I think the average American is definitely feeling the impact in the grocery stores. As you mentioned, the price of eggs and other goods such as that, specifically, as you mentioned, around those farmers in the fields, and how this the deportation, if it's having an impact on some of these jobs that traditionally are done by those who are new residents into the United States. So the real question is around, is there technology implications to this? How the farmers intend to be able to farm their crops, how they intend to do some of these things, as you mentioned, the eggs and a variety of other things that are done with these types of jobs. And so I think what we're going to begin to see is how the administration plans to address where farmers are feeling a shortage in labor work, how that will be addressed. And that, I think we still don't know yet exactly how that's being addressed. I think that the question around inflation, we've seen inflation before deportation. So inflation is not a new issue for the United States. The real question is around those farmers who own these farms, who are directly seeming to be impacted, how they will have a long-term impact in being able to either recoup labor force or being able to use technology to address some of the labor shortage that obviously is being experienced.
Yes, certainly, Maria. We'll see how Americans adjust, and perhaps President Trump does have plans, to cover up the gaps that will need to be filled by those migrants. But thank you so much for giving us the insights into what's happening in the U.S. All right, so Ladi, that's it. The average American Well, a lot of wait and see seems to be happening. So we know we used to do wait and see for the market, but it does seem in the United States now, there's a lot of wait and see going on, both in the area of the tariffs, which we hope, or we hope not though, but according to President Trump, might start from the 2nd of April, and then also the issue of the migrants being taken out of the country and what will happen to the farms and those menial jobs that the migrants used to take care of in the U.S.
And so much to also expect for, our diaspora out there. We've heard from Dr. Muda Yusuf saying that, diaspora remittances, that's at risk, with the immigration policy changes we're seeing.
Certainly.
So a lot to wait for.
Yeah,
at this point.
But I think the U.S. can also look the way of the U.K. Remember when they just opted out of the EU, and then they also had their paperwork and bureaucracy, which I think Brexit, which they're still dealing with
Brexit,
up till now. There was a time there was petrol scarcity in the UK because there were no truck drivers. Those individuals had been termed illegal and had to leave the country and all of that. So I guess President Trump will have some people look into some of these scenarios.
We all need each other.
Yes, legal or illegal.
Legal, we all need each other.
Exactly.
At this point. Thank you so much, Amy, for bringing us all those details there for what's playing out in the global markets. But we'll catch you again at 1 p.m. for Business Incorporated. We'll get a check on what's playing out with the markets. It was a bad start yesterday after getting the rebased inflation data for January. Get a check on how the markets are doing. That's at 1 p.m. today on Business Incorporated. Thank you for watching. From me and the team right here at Channels HQ. Bye for now.